Welcome to Coastal Front. Join us each week as we sit down with the movers and shakers of Vancouver to discuss stories of business, politics, accomplishment, and failure. Our aim is to keep you dialed into what matters most in our city. Now, here's your host, Andrew Johns.
My guest is Bruce McLeod, a professional engineer and chief executive officer of Sabina Gold and Silver. He's also the founder of both Sherwood Copper Corp and Stornoway Diamond Corp, and has worked as the CEO for a handful of other mining companies in the past. The demand for precious metals has skyrocketed on the onset of the COVID-19 pandemic. Across the globe, investors are actively diversifying their portfolio into gold despite soaring stock markets. What an exciting time to be joined by a true mining expert who brings over 30 years of experience to the boardroom today. Bruce, thanks for being on the show today.
Thank you very much for having me.
So let's dive right into Sabina Gold and Silver. We are going to spend some time talking about the gold industry, but I think a good backdrop to that is talking about your company in particular. You're a Canadian-based miner. Let's hear the story.
Well, we are what we call a developer, so not quite a producer, but certainly more advanced than your average explorer. And we have a very large resource, 5.2 million ounces in measured and indicated, which are reserves, and another 2 million ounces of inferred on top of that, for a total of a little over 7 million ounces at 6 grams. And 6 grams is very high grade, particularly that in our feasibility and our technical report, 72% of our production in that feasibility is from open pits. And 6 gram open pits would put us amongst the highest grade undeveloped open pits in the world.
Wow. And just to be clear on location, because
Sure.
Canada's a big country.
It is.
You're way up north.
We're in the middle of nowhere.
Okay.
And certainly that is the opportunity and the challenge. The opportunity being that we have an entire district that we own 100%. And that's an 80-kilometer long banded iron formation, which is the host rock to the gold deposits. And there's very few other places in Canada that you could be the sole owner. If this were in other greenstone belts, it would be fragmented ownership. Timmins and areas like that, where you'd probably have several hundred claim owners. Mm-hmm. The challenge is certainly
and we're talking about the territory of Nunavut, right?
In Nunavut,
yeah,
and we like to call it southwestern Nunavut.
Okay,
it certainly sounds better.
Yeah,
and but the challenge is certainly infrastructure and logistics.
Okay,
if this were a road accessible on the Trans-Canada within power, I guarantee these would be nothing but a series of mined out deposits.
Right.
And one of the things that we've done to bring ourselves forward and to advance this project more than most developers would is we have actually had to build and operate the logistics and supply chain lines all the way from southern Canada to our site. So that's building a port, building winter ice roads, airstrips, camps, and certainly that's taken a significant amount of cash to get us there. But what we have is like every other challenge that we've faced with this company, we've been able to overcome and also show that we're capable operators and capable of operating in these areas.
Okay.
And the other thing that certainly sets apart our company between other than size and grade is also we're fully permitted now. And for us, that was almost 5 years and probably $40 million of investment to not only get our permits for construction and now operating, mm-hmm. But also to be able to obtain social license, which is certainly a bigger part of this job and a bigger challenge for our industry than it's ever been.
I've never heard that term social license before, but that's a good analogy or a good summary of what that means. I think for those listeners who maybe don't understand how the gold mining evolution works from a piece of land that's never been tested before to full production of a mine, there's a lot of obviously major hurdles you have to get over, and there's some big milestones, but one of them is permitting. Is that not right, Bruce?
Oh, it's there's a lot of jurisdictions where permitting isn't a challenge, but in most of those jurisdictions, security of title isn't very secure either. Yeah. So it's an inverse correlation between permitting risk, permitting challenges, permitting timeline, permitting cost, and security of title. So what we can say is not only do we have the best security of title, a Canadian asset.
Yes.
But also the best in terms of social license, in that we've been able to show and prove to not only the regulators but also the Inuit that are the surface rights holders that we are able to build and operate and under a set of rules that we've agreed on together.
Yeah, great. Now, that's a good segue into what I wanted to ask you about, which is First Nations, and it's always a sensitive and big topic when it comes to things like building out a mine production in Canada, because they're quite a large group and a very strong group, and they have a lot of, in fairness, a lot of important rights. How have you, maybe you can talk a bit about that community, and how have you worked with that group, and have you, it seems like you got buy-in from them, so that's a really good thing.
Well, we're very lucky to operate in Nunavut.
Okay.
And part of it is Nunavut, 100% of the land claims have been settled.
Yeah.
One of the challenges that many miners and explorers have in the rest of Canada is you may have 3 or 4 overlapping Indigenous land claims, and it's not the company's job to decide who's right and who's wrong, so you better work with all of those. So when we're working in an area that right and those titles are well defined and well understood and not subject to any query, we are dealing with an area that we're grandfathered federal claims, but the Kitikmeot Innu Association is our landowner and owns the surface rights. And Nunavut is Canada's newest territory, and what they did is, when they set up the permitting regime, is they really focused it around and built it around those settled land claims and what the rights are. So it's not subject to negotiation in terms of those criteria. It is subject to negotiation of Inuit impact benefits agreements, and certainly a group that understands the sector, and we understand their requirements. And we're starting to better understand all the time is what we have to be good corporate citizens, and working within their communities. And there's 5 affected communities. The closest community is 250 kilometers away, but that is the closest community. Yeah. The closest large community. We do have about 170 kilometers from the mine. We have a small seasonal community, less than a dozen people, but those are well defined and well understood. And it certainly helps going forward, because a lot of that uncertainty to land claim settlement, which is certainly more important to a lot of these groups than the short-term jobs. And it's a challenge that people are facing all across Canada today.
Yeah, sure. Well, that's great. Now, here's your website. This is sabinagoldsilver.com, and we can see the image of is that your Back River Gold camp there that we saw?
Yes, it is.
It is. Okay.
That's the tundra in the.
It's a beautiful red.
It is, when you get that later in the summer and early in the autumn. Some wonderful colors. There's really only one color for about 6 months of the year, and it's white.
Yeah.
But it's certainly a wonderful place to work.
And on the right there, is that the landing strip?
Yes, it is. Okay. That is the existing strip, and one of the things is right now is actually you see that there's a photo of a 737 landing.
That's a big plane.
Our gravel strip isn't actually long enough to land that, so we actually land those in the wintertime only on the ice on the lakes.
Really?
Yeah.
A 737 lands on a lake.
And or Hercules heavy lift aircraft. So actually one of the things that we're doing this summer is we're actually extending that strip so we can actually put in 737s and Hercs year round. So again, building up that infrastructure and logistics as we move forward to being a producer.
Yeah. What is the challenge with landing an aircraft on a frozen lake of that size? Don't hit
the brakes. just tap them gently.
Yeah.
Rely on your thrusters. The good thing is that the people that land on these, it's second nature to them. They could probably do it on a paved strip with their eyes closed.
Yeah, amazing.
Yeah. The bigger challenge is actually weather whiteouts and that rather than the physical.
Is there someone up at camp there year round?
No. We operate Seasonally, we have operated all months of the year, and but during particularly in construction, what you try and do is move everything forward early in the year and work until it is dark 3.5 to 4 months of the year.
Yeah, sure.
But like many other people in the world, is we've been affected by COVID-19 too, and we were just in the midst of mobbing our crews in to start a program in March, and it became apparent that our crews weren't focused on the job at hand. They were worried about their safety, their family safety.
Yeah.
And the last thing you want is an accident with people not thinking about the task at hand. And we were worried, quite frankly, that if we did get a case in camp, because we're bringing in people from all across Canada, we could be the proverbial cruise ship, and nobody would want to take us to port.
Yeah.
So, we made a decision that based on the safety of our people, it was time to defer the program.
Yeah.
And we're just getting ready to mob back in. And, one thing I can't say is Canada has certainly done a much better job than many other nations in controlling the spread, and we certainly feel much safer and understand it. But we've got to take a lot of precautions in terms of the number of people we can have in camp.
Yeah.
What we have to do for screening before we bring people in. It's just another layer of safety that we have to be sure of.
Yeah. Outside of COVID-19 environment, how many people would we typically find in camp during that period of March or April as you're setting up?
Well, it depends on what we're doing. If we're drilling, it could be 40 or 50 people. If we're doing, the programs that we are doing this year is we fill every bed in that camp that we can. And part of the challenge right now is camp loading. Is it's in terms of maximum number of people, we're limited to about 90 people this season.
Yeah, still a lot of people.
It is.
Yeah. Your main project is called the Back River Gold Project, and one of the things that you mentioned when we first started talking was that you mentioned made reference to making an ice road, and we've talked about landing one of these massive aircraft on a lake. What's involved in? So for those kind of layman's terms, for someone who's never been this far up north, I've been fortunate enough to been up pretty close to where you're at, and I've been on an ice road, so I know what it looks like. But can you talk a bit about the challenges of making ice road? Is it pretty straightforward? Or is it?
It is relatively straightforward. Is the challenge is the for us is in the time that is best to build it is also the coldest time of the year.
Yeah,
it's dark 24/7. You get a little twilight on the edges. You get the later in the year you go is generally we get our snow in kind of February and March, and that road can drift in a matter of hours. The one thing that we have an advantage over, probably the most famous winter ice road in mining is the Tibbet to Contoito ice road, and that was the one that was originally built to service the Lupin gold mine, which is that was a 600-kilometer ice road from Yellowknife. Versus about 170 for us, but that's the one that still services the Acadian, Diavik, and Mountain Province Gaucho Quay diamond mines. And when they start, they actually have to build ice on the lakes to be able to make sure they're thick enough that they bring pickups and then bring light trucks and then partially loaded semis until full loads. We're colder where we are, and the most southerly part of our winter ice road is 250 kilometers north of their most northerly part. So building ice isn't the challenge. It's really in those areas that don't have enough snow is we have to build snow fence, let the snow drift in, water that snow, turn it into ice. The portages, the area that are over land, are the most challenging part. You can build 10 or 20 kilometers on lakes and the ocean in a day, where you may be 250 or 500 meters a day on some of the portages.
Oh wow, yeah, wow, that's fascinating.
Yeah,
is there much wildlife up there?
We do have a fair amount of wildlife. The number one is caribou in the area, and around the mine, not so much, but between our port facility and the mine we do get a fair amount of caribou. Most of those are in the spring, and they're part of the migration. So, one of the things that we have done is put in place. I think it's one of the most modern proactive caribou mitigation plans that anybody has in the north.
You've been in the space forever. Just before I came into the office here, I see that gold was at basically flat today. It was we're just over $1,700 an ounce. And your guys' share price closed up a little bit today at $1.73. You just did a financing recently. I think it was a $30 million raise, if I recall.
$61 million.
61. Sorry, apologize. Yep. 61. But there's been a lot of interest in gold and gold companies. What do you see happening right now in the space, and how is it different than, say, a couple of years ago? Maybe we'll go back 4 or 5 years ago when there wasn't really a huge amount of interest. I mean, the price has moved up quite a bit in the last 5 years.
Well, our feasibility, which was done in 2015, was done at $1,150 an ounce Canadian, and it showed a very economic project, versus today over $1,700. And certainly we've seen another big change in terms of Forex between the Canadian and the U.S. dollar. It was
that's right.
It was 80 cents versus probably 20% more than that today.
So you've seen almost a doubling from when you did your feasibility study in Canadian dollar prices.
In Canadian dollars, it's not a double, but it's getting close to it.
Getting close, yeah.
And certainly where we've seen a lot of the interest is in the physical, in the physical ETFs.
Yeah.
Today debt to GDP ratio is 322%. They're printing money, and they're printing more money, certainly from COVID. And really, gold is the only currency. And look, there are other things that people show as alternatives. I wouldn't call Bitcoin a currency, because the difference between Bitcoin and gold is every central bank in the world acknowledges gold, not every acknowledges other alternative holdings. And gold is really the only currency that you can't print. So I think that
there's only a finite amount of it on the planet. How much that is, we don't know exactly, but it's not like it's like you said. You definitely can't print it like the Federal Reserve is printing dollars right now. That's for sure.
That would be impossible.
Yeah.
And what we have seen is also, when we talk about higher gold price, well, look, what about all these new mines coming on stream? Well, we've seen a decade of a little investment in this sector,
right? And
it used to be 10 years from discovery till first gold pour, till you're in production.
Okay.
We were 5 years just on our permitting alone, and you can't permit unless you have a feasibility study, which means you defined a resource, which you subsequently defined as a reserve, and scoped the project. It is today, if you want that security of title, it's a 15-year plus exercise.
Right.
So what we've seen is that lack of commitment in the sector to exploration. And that doesn't mean that the miners aren't committed. They've actually done other things. I think that we're in a better situation. I think that the miners are in a better situation than they have been in many past cycles. They've paid down debt. They've been certainly a lot more conservative when it comes to M&A. You actually see M&A deals where companies do transactions and they trade up. But there's a finite number of deposits that are meaningful, something like Back River that can produce 250,000 ounces a year.
Right.
And there's very few of those discoveries that are there. And even when they are a discovery, it's going to be years until they could actually be mines.
Yeah.
And we're in the position now that within 3 years, upon making that production decision, that we can be producing.
About 3 years from now, you estimate?
We still have to make that production decision, but I think we're getting very close. And I think a lot of it is you need the markets on side, because the debt markets are there, they're available, particularly to gold. But the equity markets have been closed, and what we've shown for this last financing is they're certainly opening up, and particularly for quality projects like ours.
Yeah, I can only imagine if we were having this conversation a year ago, how different it would be. Or especially 2 years ago, because I'm not as involved in the mining space as you are every day, Bruce. But I do go to PDAC every year, and I always use that as a bit of a gauge for myself on an annual basis. I've been going for almost a decade now, to see what the sort of sentiment is. Now this year, of course, it was totally weird. because of COVID was just kind of coming into North America, and it was definitely hitting the planet. So I'll skip this year, but last year and the year before that, it was dismal. I mean, it was like, this year has been a year where if you have the name gold in your name and you got a decent business, good management, and a good project, I think you can do well like you guys have done. And it hopefully is a sign for other miners to be able to, to raise funds as well. But if you look back, say 3 years ago or 4 years ago, it must have been a pretty tough go for you guys.
Well, look, when you have a quality project, you're going to survive. I think you do have to be conservative at times, and if it's really in my mind quite simple, is if you spend $1 million on your project and you can't show plus $1 million of market capitalization after that, is probably not the time to be spending money. Now, there's certain things that you have to. Once you start permitting, you can't stop, because it's not something that you can stop. You generally, on a lot of those, is you lose the...
There's commitment levels.
There's commitment levels.
Okay.
But when it comes to exploration and development, if you're not going to create value with that spend, you have to think hard about it at the strategic and board level.
Yeah. Well, this actually is you almost kind of answered my next question, which is for those people who are listening that maybe don't have much or any exposure to a gold or gold companies in their investment portfolio today, and they wanted to look at that, and they didn't want to just look at the big producer names. They want to get a bit of a lift. They want to take a bit more of a risk and going with a medium size. Would you call yourselves a medium size? You're still considered a junior? I mean, you're over $500 million market cap.
Yeah, but it's still a junior in the business.
Yeah.
And look, I think that...
the question is, by the way, Bruce, what do you, as an investor, what would you recommend they look for? What are the kind of signs? Without speaking, obviously you're biased towards Sabina. I think I am too. But if we were to just say, to the investors out there, if you're looking to invest in a gold junior, what are the kind of main highlights? What are the things you want to be looking for?
Well, there's probably 4 different areas that people can look at it.
Okay.
Those that want... I think that many that are followers of the sector realize that in gold bull markets, gold equities will outperform gold bullion 2 to 3 times.
Exactly.
So if both are rising,
yeah,
generally the gold equities will outperform the physical gold. Now, what we've had is...
And that's a very true statement, folks. I mean, I'm a big advocate of that. I've personally not ever bought physical gold. I'm a big fan of buying gold companies.
Mm-hmm. And I believe that, look, in a conservative fashion, it's probably worth having a bit of a barbell approach. Mm-hmm. Is take some of the gold physical and the rest into that, and then you get I bought my wife jewelry. Okay. Yeah, we all have. That's one of the reasons gold keeps going up. Yeah. Look, I think in the early stages, coming out of a long bear market in gold, is the first one to buy, and the first ones that get revalued are the majors. If we look at Agnico Eagle, we look at Barrick, we look at Anglo. Right. They've had wonderful runs. Yeah. If we look in this year, is gold has outperformed the S&P, and remember, the S&P is still is above levels that it has seen in quite a while. If we look over in 12 months, gold is far exceeded S&P in terms of returns in both the GDX and in terms of physical, compared to the S&P.
And just for listeners, GDX is the ETF, right? It's the global. That is the senior. Well, they call it the senior is, and then there's the GDXJ, which is more the junior component. Right. Of which one of the challenges is in terms of liquidity, in terms of size. There's very few that actually meet the true criteria. Yeah. Companies like Kinross are still in the GDXJ, which is certainly a major. Yeah. Is Sabina on any ETF?
We're on some of the small ones. We're not in the GDXJ. Every time a rebalancing comes out, I look for our name. I think that I've got to say, again, I am biased. I go, well, we've got a better asset than those. Exactly. Why are they in? So it's it's an algorithm that certainly has got nothing to do with anything but market cap and liquidity is where their inclusions sit. But I think there's always a barbell approach. Some of the majors, particularly in the early parts of the of gold bull runs. The next stage is certainly in the mid tiers and the junior producers, and then it gets to the exploration companies. Mm-hmm. And look, there's a lot of people that have done very well by being able to buying baskets of the explorers that if they're successful can be 10 or 20 times, but if they're not successful, that can also be very easy calculation. It was 100%. Yeah. So I think right now, I am biased that it's really the developers, I think, are going to have a significant run in that. The one thing that if you look at all the majors, all the mid-tiers, and then certainly the junior producers, is because of the lack of reinvestment, is their production profiles are not sustainable without either doing M&A or exploring and developing their own new deposits.
Yeah.
And look, many of the majors are good explorers, but many aren't. Mm-hmm. And I think that is really where all roads meet is the good developers. And there's probably never been fewer than there is today. Mm-hmm. I think there will be a significant re-rating as they move up the chain towards production.
Mm-hmm. Bruce, you've been in this business for 30 plus years, right? Is that a fair statement?
I've had 2 jobs. I've had a paper route and I've been in the mining business. So
okay.
And I haven't had a paper route for a while.
For a while. Okay. So with respect to raising capital and looking at raising money today, I've been in the financial services business for 21 years myself. And when I started, even before I started, my uncle who got me into the business worked at a small shop called Global Securities years ago. His name's also Bruce, my uncle Bruce. And I used to see junior miners be able to raise money, with not too much difficulty, by a lot of like individual investors. Mm-hmm. And it seems like today that just doesn't happen. It's like if you don't have some major institutional investors kind of funding that deal, it's really hard to get it off the ground. It just doesn't seem like today it's because here's my biased view. I think the banks have encroached on this market. They've taken a lot of people who'd be willing to take a risk on a mid-sized name like Sabina, and they've taken them and put them into some plugged-in mutual fund type investment, and they're no longer kind of engaging with, and they don't have a so-called stockbroker anymore. They just have a financial representative at their bank that gets them into this balanced portfolio of some type, and that's it. And it seems like that must be, is that a fair observation?
Oh, it's absolutely fair, but
okay.
it's so I'm 3rd generation of a mining family.
Oh, are you?
And my father was in the business, and he probably sat in this office here, and Peter Brown was a sponsor of his in the old days.
Yeah.
But I was talking history of financing, and the first mine that my father built was in 1973.
Okay.
Well, in 1973, there wasn't such a thing as mutual funds.
Right. Yeah. Sure.
So you had stockbrokers who chose baskets of stocks for their clients based on their needs.
Yeah.
And it was just starting to move into managed money and mutual funds, and we kind of came to this conclusion that in the early days, as you had no mutual funds playing the sector. The only people that were actually financing were the Peter Browns of the world and the balance of the independent broker dealers.
Yes. And
the stock picker, who were the stockbroker, who actually could make an analysis and decide what was a good investment, and certainly didn't have the regulation today telling you what you can and you can't recommend to your clients. And then what happened is you built a project to the point that it was something that was real. And then you'd have joint ventures with majors. You've had earn-ins, and then when it came time to build it, it was really you'd have to borrow the money. And again, the first mine that my father built, Tech was an early sponsor, took part of a lot of the early financings, and then he borrowed the money from Royal Bank of Canada to build it. Well, what's funny is we're almost at that same spot today, because although there are mutual funds, there's not many of them today that invest in certainly in grassroots exploration. So it's still the sponsor brokers who pick these stories.
Yes.
And then we've seen more money in the last 3 to 5 years coming from majors in terms of financing when things get a little bit interesting. And what's happened is the banks have been really replaced with private equity. So we're almost back to where we were in the 70s and how we finance these.
Yeah.
But what happens is, so much of the money that is out there today has been chasing low fee ETF, so it's really been a fee-driven business.
Yes.
But one thing I can tell you in this sector is I would never trust my money to an algorithm saying that I should buy these mining stocks, particularly of the junior and the emerging ones.
Yeah, sure.
There's just so many things that an algorithm isn't going to, so many factors that it will not
variables,
take into account. And I believe that when you come into a market like this, is the active funds, the
active
fund
trading.
manager, active
100%.
trading. My prediction is if we end up with a gold price today or where we are or higher a year from now, is if you look at the ETFs and their return versus the actively managed funds, you're going to see a significantly higher return from those. And when we see that happening, and they get inflows, is all of a sudden we'll see back to a healthy market again in our sector. Yeah. So it's one of those that it truly is. Only the fittest survive, and what we've had is very few companies that have been able to advance a project. And we've spent $300 million on taking Back River from a concept to where it is today.
Yeah.
And having that financial aptitude and the ability of knowing when to raise capital, what to spend it on, when to take your foot off the gas, maybe tap the brake, I think is something that's very important in times that are uncertain. But I think that we certainly are in an environment today that feels much better than it has in a decade.
Yeah, absolutely. And I am a big believer of both passive and active investing at all times. But the way I focus with our clients is we swing back and forth as far as the weighting is concerned. So I believe that every investor should have a certain amount of capital in what I call perpetual hold positions. Mm-hmm. But there are times like right now that we're really putting our foot down the gas when it comes to active trading, because I think it's the only time in which, because you can, Peter Lynch proved this years ago that, I think it was from the era of, I think it was like 1970, early 70s to early 80s, where he had, we were in a range-bound market. The Dow basically didn't move for almost a decade. Well, this guy made fortunes for himself and his investors by basically just buying low and selling high, but not just the day trading was not a thing back then. It was about finding good companies and getting on that momentum at the right time in the right sector.
Value trading.
Yeah, exactly. Yeah. So now that I know you're a third generation miner and you're also born and raised here in Vancouver, I'd love to
raised here.
Oh, raised here. Where were you born?
I was born in Alberta.
In Alberta. Okay. So
my dad was on a mining job, and my mother went back to her family in Alberta when I was born.
Okay. Good. But you grew up here in Vancouver.
Yes.
And this has been a hotbed for mining activity from a financing perspective. There seems to be an incredible amount of mining companies based in Vancouver, but projects all around the world, not just in different parts of Canada. Do you have any kind of, for those who maybe haven't really followed the mining space, get an idea as to, why has Vancouver become that, and what was maybe do you have an idea of why the reason was, and is it still a kind of hotbed today? I believe that the stat is that Canada, I think, has more publicly listed mining companies on the TSX and TSX Venture than any other exchanges in the world, I think, is the case.
The reason is we've really built up a center of excellence. It's not only British Columbia is a great place to live.
Yeah.
And we have many great deposits in British Columbia, but it's not because we have the greatest deposits in the world that we have a mining center of excellence.
Right.
It's because we have the infrastructure to support them.
Okay.
So we have the accountants, we have the engineering companies, we have the legal teams.
Right.
We have one of the few junior exchanges that is got a lot of rules, and it's well regulated. And is
that the TSX Venture you're referring to?
Or I'm talking more about the Venture, because that's really where the numbers come from. It's not because we have the most TSX companies in the world. It's really a Venture. It's that farm team.
Yeah.
And as we know,
such a great analogy, farm team. I love it. Yeah.
It is a farm team,
yeah.
and to have. Not everybody makes it in the big leagues.
Yeah.
So you certainly have to have far more players that think that they're going to make it than those that actually do. And it's a rarity to make it to across that line. But it's really having the infrastructure to be able to support those. And we import people from all over the world The UBC certainly has got a great mining engineering and geology department.
Yeah.
But, there's many others that do in the U.S., Canada, and worldwide.
Yeah.
And, it's also a good jumping off point for travel, particularly Latin America and other areas. And it's one of the few areas that you can actually raise, meaningful money for exploration projects and development. And, it is not a business that it used to be that you could do a meaningful program for $100,000 or $200,000. It's millions of dollars at a time for significant projects, and significant drill programs. And this is one of the few places that actually has all of the parts that are able to raise that capital. So I think it's very important that government realize that not only the jobs that are here in Vancouver that support that, but with the spin-off jobs is how much we really contribute to the economy of British Columbia.
Yeah, that's a really good point, and that's a good segue into one of the things I noticed at PDAC this year was this massive protest. I mean, they always have protesters almost every year, but this one was pretty big this year.
Yeah, they were there pretty steady.
Pretty solid. And I always find it ironic that people are like taking nice pictures on their iPhones that are made full of metals that, and probably traveled there on a GO train from their suburb location out in Toronto to go protest about the mining activity. Look, there's some justification behind. So there's been some bad players and some bad events that have happened in the mining space. I think a lot of people don't realize that that's probably those environmental hazards and things that have happened have been largely outside of Canada from my observation. But how do you conduct yourselves in a way that makes sure that, investors know that you're not going to be the next? I mean, I will name one. The one mine here is the Mount Poly mine. I think it was Imperial Metals. And they had the tailings pond that broke. Mm-hmm. So you obviously have regulations you need to sort of adhere by, but I don't know if those are enough are they strict enough to be able to, for an investor go, you know what, I don't need to worry about whether Sabina's being a good corporate citizen because the government's there looking out on my behalf, or is there something more that we need to look at?
Look, the rules continually change. Remember, that isn't a tailings facility that was built in the last decade. It was built under our prior rules, and certainly they've been beefed up and since then in terms of geotech and third-party review and government third-party review. Look, I think certainly in Canada is the number of safe operations and those that are environmentally responsible and do not have significant impact versus those few that do. We're trying to reduce that to zero harm for everyone.
Yeah.
And one of the things that's very important today, and a term that a decade ago you didn't hear of in the mining business and actually in investing at all, was ESG,
right?
Environmental and social governance. And today that is at the top of people's minds. And there are a growing number of institutional investors that look at your ESG scorecard and decide whether we're going to invest in that company depending on what they do. And things like tailings ponds facilities, commitment to the people, not only their health and their safety, but to the environment. Those things are important. And if we look at ESG on a global scale, is the one thing that is certainly a big benefit is the Canadian miners have been in cutting edge on that because we've had to. We're working in areas that are generally more remote, sometimes pristine areas that haven't been affected by modern development.
Yeah.
And so we've been on the forefront, I think, of developing good ESG practices. So sometimes we feel that we don't get the credit for that, but at the end of the day is we've got to keep pushing harder and keep doing better until people do recognize that we are one of the best industries in the world when it comes to environmental and social governance.
Yeah. Okay. Well, it's a good answer. And I do think that's a good point for listeners to understand is that, look, at the end of the day, unless you're going to stop riding your bike and taking pictures on your phone, mining activity has to continue as long as global growth is happening. And it's in the same analogy that a lot of people in the oil patch say is like, well, would you rather get our oil from Alberta or from Saudi Arabia, who's known for major human rights infractions? And I kind of take the same view with when it comes to mining. I like to know that at least the mining companies here in Canada are going to be held to a higher standard than they may be abroad. Not to say the ones that are operating projects abroad aren't, but you've got your own social governance internally, but then you've got it on top with the regulations. On the note of regulations, being in this business as long as you have, Bruce, is there any regulatory shift or change that's happened that you are quite critical of, that you could speak of, that you say, you know what, this has gone too far, or it's a little over the top, and it doesn't need to be as difficult for us miners than it would have been, say, 5 or 10 or longer years ago or longer?
Look, if we look at a lot of these changes, any new laws, rules, regulations, I think there's very few people in business that say, wow, we really needed that. But at the end of the day, I think you've got to be pragmatic, and you've got to recognize, what is good, and some of the things that maybe just because we've done it this way or 10 or 20 years that it doesn't mean that we should continue.
Okay.
Look, I think that particularly in Canada, I'd say, virtually all of the laws and the rules are put in with good intentions. Sometimes the implementation and the way they're regulated isn't the best. Mm-hmm. But look, we live in a democracy, and we have the ability to change politicians if so desire. Yeah. And so I think, look, all of these things, I don't think there's any single rule out there that I'd say is going to lead to the demise of the industry. Yeah. Look, there's certain things that are, I'd say, particularly for Sabina, that are more difficult is we look at carbon tax. Okay. Well, we operate in an area that we're not connected to any grid. We don't have the ability to use natural gas because there's no natural gas. If we look at solar, well, it's dark 4 months of the year. If we right. look at wind power, it can work, but it's not always blowing with wind. And at the end of the day, you still need diesel as backup. And if we look at capital, if we wanted to build that on top of it, which I'd love to, is you're looking at another, probably $200 million for Project R's to be able to put supplemental wind. So I think that carbon tax is probably one that I would be the most critical of in an area that we really don't have any choices. Now, again, sure, a lot of people aren't going to feel sorry for the mining company, but what about the Inuit in Cambridge Bay? That every bit of their power is generated by diesel because there is no alternative that is economic today. Mm-hmm. Well, that carbon pricing tax is being passed on. And from a personal standpoint, my last gas bill, the carbon tax was actually higher than the price of the gas delivered. And I was like, come on, what's wrong here? But so now I'm
So can you? No. Look, this is what I want to talk about. I want to get that word out there, and it's refreshing to hear somebody be critical, because sometimes CEOs don't want to be critical of their regulators or rules that they have to adhere by, because they either look like they're self-serving, or maybe they don't want to be in the hot seat with those regulators later on. And look, that's a very big topic, is the whole carbon tax. Can you kind of dumb it down for the layman's level? Like, how does that impact Sabina today? Like, what does that carbon tax do to you? How does it work?
Well, if we take a look at low fuel prices where we're today, it's probably less of an impact than it was at $100 a barrel oil when it was first brought in. It can probably add 5% to our total cost of generating power. Mm-hmm. And the cost for us to generate power is the number 2 cost to operate a mine in the north, second only to our labor cost. Yeah. So it can have a meaningful impact, and if there was, I understand the purpose is to drive people away from fossil fuels and look at alternative sources of energy. And there's a way that you can, instead of driving to work solo, is there a way you can take transit and other? Like, these are good things, and I think that we think we have to think of as society. But
it has to be in the right context of the environment. But it has to be in the
right context, and there's no carve-outs. And I think the carve-outs for those, look, if there was a cost-effective technology that would work for the harsh environment that we're in, I would love to be able to embrace it. But cost is a big part of what we need to do, particularly as a junior. That every dollar that we have to put into this project, we either have to borrow at high rates because of the risk profile of our company, or issue it equity at a discount to our net asset value. So either way, it's very expensive money for us, and to be able to do those out of cash flow at a later date is certainly much more amenable or palatable than today.
Yeah. earlier on we talked about you talked about kind of the three different types of mining companies. So there's explorers, and then there's, what did you describe your category? Developers, and then there's the majors. So I thought maybe we could do
the producers, we'll call it.
Producers.
Yeah, and then there's three. There's the juniors, mid-tiers, and the majors in the producer category.
There's three? Sorry, were they?
Juniors, intermediates, and majors in the producer category.
Okay, so junior producer.
It's generally single asset producer, and generally,
I see.
Yeah, a junior generally that's kind of under the 150,000 ounce per annum. Mid-tier, kind of that 150 to 500,000 to 1,000,000 ounces, and then 1,000,000 ounce plus is really the majors.
Okay.
Annual production.
Would you? I don't know how this works exactly. Do you envision taking Sabina from a intermediate, was what you called it, right?
Yeah, I think we're, with our production profile, we would be classified as an intermediate.
Yeah. Do you eventually see Sabina just being bought by a major producer, or would you actually take this company all the way to becoming a junior producer yourselves?
Oh, that's what our strategy is.
Yeah.
But you have to have a strategy that looks at it from a value perspective.
Right.
Is today, if you look at our technical report and our study, we've only converted into reserves about 2.3 million ounces of 7.2 in our total in terms of global resource. So it's about a third of our total resources. And today we trade at 0.5 times net asset value on that third of our resources. We're in an M&A market, merger and acquisition market, that there's a lot of, there's no merger, no premium mergers, or 18% is a knock it out of the park premium. And there's a scarcity of assets. So to be able to say, look, we'd be happy at an 18% premium to where we're trading today at a 0.5 times NAV, I can't say that any of our significant shareholders would be happy with that.
Yeah.
And so the other way to do it is, until those valuations are more acceptable, is build value the way that we build value is build the mine
just keep building.
Keep building. Now, one of the things that many of the junior producers, the single asset producers, have as a challenge is where's that next mine coming from? You've emptied the gas tank to get that first one up and running.
Yeah.
If there's any challenges to operating it, generally, it's a lack of capital.
Yeah.
And finding that next one is got to be twice as hard as finding that first one.
Right.
Well, we've got 2 million ounces in all categories sitting up at George, which is 50 kilometers away, which is another part of this belt that we haven't actually explored since I've been with this company.
Okay.
So
this is another property
asset
or project
within the Back River District. So on this one right here,
okay,
it says Back River District scale opportunity. You can see the Goose project, which is where the first mine will be built. That is a little over 5 million ounces in all categories, and George, which is about 50 kilometers away, is 1.1 million ounces in indicated, another million ounces of inferred, so a total of about 2 million ounces at around 6 grams. And we have not actively explored that or tried to increase the size of that since, again, I've been with this company. So again, that's our embedded internal growth. That's our second mine. But we keep finding new deposits within the Goose area. And hopefully we don't have to turn to George anytime soon. I think certainly our near-term growth will be within the Goose project.
Okay, and then that port is up north. What is Bath the name of the community, or is that the name of your project? A project.
That's actually the name of some of the mineral claims that are just to the south of that.
And is that your mineral claims as well?
Those ones
okay, gotcha.
There's others in the area, but certainly the only ones. All of ours are exposed iron formation. Even between George and Goose, there are other people who have claims, but those iron formations are buried, and it could be several hundred meters. So,
right.
We're really sticking with the ones that we have the highest hope in, and of being able to explore and develop successfully.
Yeah. Now, your company's named Sabina Gold and Silver. We haven't talked about silver at all. Is still silver a part of this equation at all, Bruce?
Well, originally, I shouldn't say originally because the company's been around for a very, very, very long time. But the Hackett lead zinc silver project was a big part of Sabina's earlier success, and that is a very high grade silver rich polymetallic deposit. And that was actually sold to Xstrata, a major base metal miner, which in turn was bought by Glencore. And what we have is a royalty which is for 22.5% of the first 190 million ounces of silver produced. And that is about equivalent to the resource on this property.
Oh, wow.
So that's at no cost to us, and we get 12.5% of any silver production beyond that. So certainly a big part is silver, and we do have significant exposure at no capital to us on the silver from the Hackett River project.
Wow. But that's not in production yet.
No, it's not. And right now,
what's happening with silver prices? I haven't looked at
well,
all.
We've gone from 12 to 16, 17, 18 in recent months. So certainly much better.
Yeah.
Glencore has not made public any plans for the project. But I think there's so few of these, high grade polymetallic silver projects that it's just a matter of time until it's developed.
Mm. Do you have any strategic investors?
We have two.
You do? Who are they?
We have Dundee Precious Metals, which we actually acquired the project from. So they never. Oh. It was less so a strategic investment, more so that we acquired it and they've stayed with the company and participated in many of the financings that we've done. But we brought in Zhaojin Mining, which is the fifth largest Chinese gold producer, and they own 9.9% of Sabina.
Okay. And are they there to likely be involved more from a financing perspective, or
look? At the end of the day, that's what I'm led to believe.
Yeah.
Look, I don't think that they have the expertise to be able to operate in Canada's far north.
Yeah.
But what they've said publicly is they love the deposit.
Yeah.
And they like to be able to be there to learn what it takes to take a project from exploration through development into production.
Yeah. Yeah. Wow. Great. What is gold used for other than jewelry, as we talked about buying jewelry for our wives? What else does it get used for?
Well, really it's backing currencies is the number one use.
When we talked this morning, you made reference to something that I thought was fascinating, because you were talking about how a lot of central banks and governments are buying gold again, but it wasn't too long ago that we actually saw a lot of banks were selling their gold, and I think it's classically like they were selling it at a low and then buying it at a high. Terrible investors, by the way.
I don't think unfortunately we all trust our money with the central banks.
I know.
I don't do it by choice. So look, if we look at both Russia and China,
they're buying.
They're buying, and I think there's been a number of articles that what they're trying to do is create a gold-backed currency that would dethrone the U.S. Dollar as the world currency.
Yeah.
Whether they can be successful or not, who knows? But
I don't know if they even need to do it, Bruce. I don't even think they need to actually. I think the U.S. government's doing this on its own. I mean, I know I'm probably preaching to the converted here, but the amount of money being printed by the ECB, by Bank of Canada, which is relatively inconsequential in the global world. But I mean, you look at the amount of money that's being printed right now in Canada is insane.
Yeah.
You can't print all this money and not have a consequence from it. You know what I mean?
No. And, today there's, $1 trillion worth of gold held by the central banks of the world.
Right.
Again, one of the few currencies that you can't print. Gold has actually done what it should be in terms of financial times like this, times of economic uncertainty, in terms of high volatility, of low interest rates, and potentially high inflation. Remember, in Canada, before COVID, people seem to forget that we were essentially entering into a recession.
Yes.
So I think we may be in a perfect storm in terms of the thesis for investment in gold and gold equity.
Yeah. Well, I'm in agreement with you. I think that the pain has not been felt yet. I've been very vocal about this. I think that all these programs, between the printing of money as well as these various programs that the government of Canada has put out, is really only kicking the can down the road. I think ultimately people have to accept the fact that there is some serious pain that's a result of this global pandemic. It was nobody's fault in my view. There's been a lot of just bad things have happened, and sometimes bad stuff happens. You just got to take the pain and move on, and we haven't had to feel that yet.
No, but I think we're going to.
I think it's going to be coming. So, which for the purpose, I mean, I don't want to speak negatively, but for a company like you, that's a good thing, because I do agree that when things go deep south on the economic front, and especially with the uncertainty around the social unrest as well that we're seeing, gold will become something that I think a lot of people are going to go towards. So, but we'll see. So now you've got a bunch of. I'm going to wrap this up here for you, Bruce. You've got a bunch of money in the bank right now. What is the latest financing you did? You said it was just over $60 million.
Yes.
Okay. What's that money earmarked for?
Additional exploration, and part of that is not only is we have been very successful in finding higher grade portions of this deposit that have been previously drilled but not well understood. And it's going to be, some of that is going to be proving that thesis that we'll be able to deliver some of the higher grades earlier in the mine life. And then the balance of the exploration dollars is really going to be more development dollars as infill drilling is, some people have stated that, we've done all this drilling and yet we haven't presented a new resource. Well, I think people have to realize that in order even to a resource, which isn't a feasibility, that's an inferred resources, not measured.
Can you just reserves. For a moment explain the difference, Bruce, so people understand what you're talking about here?
Well, very simply, reserves are ones that have been drilled at a close enough spacing, there's enough understanding that you can actually wrap an economic study around those, and there's very rigid classifications on how those can be done under Canadian standards. The National Instrument 43101 is the guidelines for mineral resources and reserves. And resources are those that aren't drilled to an ability that you can actually put an economic, like a feasibility around, but there is some certainty that they're there. Oh. And what
sorry guys.
So what we will be doing is infill drilling, and we're going to have to spend about $28 million in infill drilling just to bring these new discoveries into the resource classification, which again, we can't do a new, which won't correlate to reserves, but certainly enough to show that there is significant upside in terms of mine life and hopefully on some of these new areas in terms of grade. We're going to continue to build out some of the infrastructure. The first thing that we're going to be doing is extending that airstrip, as we talked about earlier, to be able to bring in heavier aircraft, which is certainly more important now, kind of post-COVID. It'll allow us to bring in larger aircraft from places like Edmonton directly, rather than having to come through some of the smaller communities. And also building the road network, building the pads, some of the equipment that we need for production. It's really bringing together a lot of those so we can actually make, when we make a production decision, we can compress that timeline between that decision and first gold.
Oh, great. Okay. And you mentioned that you're now in the process of finally getting camps set up.
Yep. And it'll be another week and a half, and we'll be moving into site.
Great. Well, Bruce McLeod, CEO of Sabina Gold and Silver, thanks so much for being on the show today. It was a really engaging conversation. Great story. Love it. And best of luck to you and your team as the months unfold here.
Thanks for hosting.
Okay.